financial sector involved in adaptation. So first, I'll invite the first panel. Members of the first panel, come please join me. That is Mr. Frank Nyabudege, Tanzania Agricultural Development Bank. Please take your seat. Kotaro Taniguchi Jaika, please take your seat. And Yoslin Precasta Prepoko. Prepako?
Yes, I'm online.
Okay, we don't have Prepako yet. Oh, she's online. Thank you. Now, I will then invite our keynote speaker who has a presentation. Please, let's have his presentation loaded so we can get started. We have two panels just to say. Thank you.
Okay, thank you very much, everyone. I think we can move on to the next slide. And as we do, and even next slide, thank you, we can stop here. My name is Remco Fischer. I lead the climate work at UNEP Finance Initiative, and we are basically a UNEP facilitated network of almost 600 financial institutions, mostly from the private sector, mostly commercial banks, commercial insurance companies, institutional investors. And I would say over the last decade or so, really most of our work has been on mitigation. We've been working a lot on Paris, on aligning financial portfolios with Paris, aligning financial portfolios with net zero. And we've done that through a number of net zero platforms. But at the same time, we have seen, unsurprisingly, in our membership surveys, we run a survey every year with all of our members, and we ask them, what's the top priority for you in the future? And for 3 consecutive years now, the top priority has been adaptation, physical climate change, physical climate-related risks, opportunities, impacts. And so we've also now been gearing up, not immediately now, but for the last couple of years, our adaptation-related activities, again, vis-a-vis our members who are private sector, mostly financial institutions. I should mention our members are 50% developed countries and 50% developing countries. So we have truly a kind of private financial view on things that is truly global. And what I'm going to do today, just take you through how are we approaching this issue of physical climate change, adaptation, resilience, with a focus on private finance mobilization, working with the finance sector, and there are, I would say, 3 pieces to that. But before I go into our work, just a few words on where we are on adaptation globally. I think one thing to note is that now in 2025, we are seeing a lot more warming than we were expecting to see in the models, etc. And that is obviously unsettling. We're seeing, as a result of that, for each amount of warming, more physical impacts that we were expected to see. So we're now already seeing extreme weather events and also chronic slow onset events at a pace and at a magnitude that we were only expecting to see in the 2030s and the 2040s. That's number one. That's not good. Number two, when it comes to finance, we know that today there's a totality of 2 trillion of climate finance flowing. That's globally, that's public and private. So that's the totality, that's international, domestic. 2 trillion per annum. It's not that bad, actually, and there's been a lot of growth. But out of those 2 trillion, the estimates that we have is that only 60 billion are for adaptation. Again, this is public, private, domestic, international, all put together. And then if you look only out of those 60 billion for adaptation, if you look only at those that are internationally mobilized for developing countries, so it's public adaptation finance for developing countries, we're looking at 25 billion. Now, some of these figures may be underestimated because a lot of the private sector adaptation finance that gets provided is hard to capture, because the private sector doesn't call it adaptation finance. It's just embedded in their usual business. So perhaps we can assume that it's not 60, perhaps it's 100, but still, if you contrast that to the 2 trillion total flowing, it's still tiny. And so if we now look at, so we have in terms of internationally mobilized for developing countries, we are something like 25, 30 billion flowing now. And we know from the Baku roadmap that by 2035, the totality that we want to see mobilized is 300 billion to 1.3 trillion. And if we say parity between mitigation and adaptation, then we're talking in between 150 billion, which is half of 300, all the way to something like 650 billion. And now it's at the moment 25, 125. That's the growth trajectory. So let me tell you that as that's the backdrop. So the first thing that we're doing as UNEP-FI on all of this is working with IDFC, FIX, and many other finance sector platforms, public and private, to speak to the NCQG process here to make sure that, and we can move on to the next slide. I don't know if we have a control for the slides or if this is being, okay. So one of the things that we're doing, this is not only adaptation, this is adaptation mitigation, but we've collaborated with IDFC, FIX, PRI through this platform. It's called the Transformational Climate Finance Group. It brings together thousands of financial institutions from the public through these platforms that you see there, from the public and the private, to make recommendations to the NCQG process, the Baku to Belém, Article 9 of the convention, to make sure that we're not only looking at project by project financing, but we're looking at systemic finance. We need to start looking at system transformations. And that's for mitigation and adaptation, but particularly pronounced for adaptation. And I just wanted to mention, so one of the things that we're doing is with our membership on adaptation mitigation, talking about systemic effects to and transformational effects of finance. And we're doing that here through this group vis-a-vis the NCQG. Now, the second thing that we're doing, and we can move on, is that we are working with the banking industry. This is obviously private sector. And we are working with our private commercial banks in our membership to help them embed adaptation and physical climate topics into everything that they do. And this started already 10 years ago on physical risk. So we help the financial industry, including the banking industry, to better assess climate-related physical risks that are financial to their portfolios. And we've been doing that for a long time. But more recently, but that's just banks protecting themselves and their clients from the physical impacts of climate change, which is obviously the first thing that they need to do. More recently, we've started asking the question, how is it that banks not only protect their own assets and their clients' assets from physical, but how are they part of their communities in terms of also supporting the adaptation of the public goods around them, the public assets, etc. So we just last year we published, after having published tons of resources on physical risks, we published also something on target setting for impact. And this year, and this is what we're going to talk about in the next few slides, we brought everything together, risk, opportunity, impact, into one guidance for the banking industry that tells them, how do you integrate everything into your course of business, into your day-to-day business? And if we go to the next slide, I can start telling you about this. We had a working group and of commercial banks from all the continents around the world, developing countries. I believe our Credit Agricole will also be on the panel here, so they were a member. And we wanted to, in particular, look at some of the things that you see there on the left-hand side of the slide. Give guidance on how do you understand your context, how do you do client engagement, how do you do product development, how do you do business strategy, how do you do all of those things, having in mind, again, risks, opportunities, impacts. We need banks to be looking not only at one of those three things, but at everything in tandem. Move to the next slide. I'm getting some echo through the system. This is then, we have at UNEP-FI something called the Principles for Responsible Banking. This is not climate specific. This is a broad set of principles for the banking industry. And they have a system. They've established a system of how banks, commercial banks, can approach sustainability topics. And it goes assessment, strategy, action. And that's exactly, we took that notion, that is the steps that you go through as a bank. And then we said on each one of those steps, assessment, strategy, action, how do you include climate adaptation, risk, impact, opportunity into that? Next slide, please. And so we start with strategy. And here what our guidance tells our banks is, no, sorry, there should be one on assessment before this. Can you go back? There should be a slide on assessment. I think we skipped the slide. No, go back. You're going forward. Okay. No, one more. One more. No, go forward. No, you're going backwards now. Go forward. No, backwards. Anyway, let me tell you about the first step is assessment. Assessment is understanding what your context is. For this, we're telling our banks, you need to be on top of your NDCs. You need to know what your country's NDCs say. You need to know what your country's NAP says, but you need to also be looking at what your central banks are telling you. What your country's central banks and banking supervisory authorities are saying in terms of stress testing. There are stress testing schemes coming up everywhere. You need to be on top of that. And then, of course, the foundation of everything that you will do is going to be risk. You need to understand where in your portfolio, the way it's now and the way you want to grow your portfolio into the future, where are there physical risks? And so there's a ton of tools now out there, and there's a whole market of tool providers and data providers that offer this. And we're totally at the wrong slide, but no, you need to go back. And so the assessment part.
Okay, hello everyone. We're gonna start. Thank you all for coming. I know COP has a lot of different events, so I'm really happy that I have your attention now. So I'm Juliana Martins. I'll be presenting this panel together with my colleagues Rafael Cavalotti, Brian.
Okay, I don't know if you can hear me now or not. Yeah.
And
So the assessment part is you need to understand your context.
So
you need to understand, and I said it, you need to understand the policy context, the economic context, the sectoral context, and you need to understand the physical risk context. And now the next bit would be on your strategy. And for that, I do need the slide. So if I could be given a control for the slides, that would be really good.
Networks are expanding worldwide.
Backward. Yeah, I don't know. It's go back in this back. We started with assessments. No, he's going forwards. Go back. Okay, now one forward. There's one slide missing, doesn't matter. We covered assessment, we'll go into strategy. Stop there, thank you, stop there. Okay, so then once you know your context, you go into developing your business strategy on climate adaptation. And here, the first step is portfolio-based and product-based strategy. You need to know your priorities. What sectors, what products, what geographies, if you're exposed to multiple geographies, what climate hazards, what climate hazards are you preparing for? What's your risk appetite? It may be that for the risks that you have identified, you say, I can deal with those risks, I can absorb them, but it may be for some, you can't, and you want to do something about it. You need to also decide, are you only going to apply a risk mitigation strategy, or are you going to combine a risk mitigation, risk assessment strategy for your portfolio, also with an explicit additional opportunity and growth strategy for what we're calling the adaptation economy today? And then you need to be thinking the systemic contribution. not only you and your assets again, but you can be fully on top protecting your assets and growing your opportunities. If the system around you is not resilient because the public goods are deteriorating and the public infrastructure is deteriorating, your own assets and your own clients will suffer, and that will increase your risk. So you need to be looking at systemic actors, and as a part of that, dealing with public authorities. That's systemic resilience. And then you need to be looking at governance. Next slide, which is the action slides. So this is the action. And here, there's a number of things that you need to be doing as a financial institution. You need to have an operating model that is, of course, under the governance, but that stipulates what are the different tasks and the different things that need doing on these topics and assigning roles to that. You need to be, again, looking at your portfolio strategy, how much of this is risk, how much of this is opportunity. Client engagement is going to be huge for commercial banks and also commercial insurance companies. It's different from institutional investors. Institutional investors operate in much more liquid markets, so also they can easily divest. If they find that one area is just too risky, they may just take capital away from that, and they can do that pretty much in seconds. For banks and insurance companies that are operating in very illiquid markets, they cannot really do that. So they need to really be working with their clients, understanding their clients, their risks and needs, and offering them financial solutions. And then there needs to be reporting and disclosure. If we could, this sums up. So we started the UNEP 5 journey, risks, opportunities, impact. What is this? What does this look like? And now this guidance here tells the banks, how do you operationalize that in your business, within your institution? Let me tell you, and then I'll conclude, another project that we're doing, if we can move on to the next slide. And you can find this practical guidance on implementing adaptation and resilience for banks here, but I've spoken to you about this now. If we can move on to the next one, and the next one, and the next one. We are also, stop here, in addition to working with the commercial banks, and so as to also start looking more, as I was saying, at the public good side of things, we also have started connecting dots between the private and the public, between commercial banks and DFIs and MDBs, and we're doing that through the investors adaptation resilience collaborative. You can see some of the members here. And this collaborative, what we've just launched last week, we've launched the Investors Resilience Challenge. What is the objective of this challenge? Is to better be able to identify and qualify what is adaptation finance or not. This is different from everything that I've been telling you about. Risks, impacts, opportunities, that's more commercial dimension. Here it's more politically. We want to measure how much adaptation finance is flowing. And so we've come up with a system under this Investor Resilience Challenge. If you go next to the next slide, please. We've come up with a system. It's a very simple system that starts bringing various concepts together, but in a way that will allow initially DFIs and MDBs, but over time also commercial banks and institutional investors to again identify and qualify what is an adaptation transaction and what is not. And so we've come up with these 5 criteria that you see here on the bottom. And the idea for now is to say, if a financial institution ticks 2 of these criteria for a transaction, then that transaction will be compatible, it will be aligned with the resilience challenge. Let me quickly take you through the 5 and then I stop. The first one is, if you're making a transaction towards an asset or towards a client, have you assessed the physical climate risk exposure of that client and asset? Have you done what we're calling a PCRA, a physical climate risk assessment? If the answer to that is yes, I've done that because it was needed, because the client obviously was exposed to such risks, that is one criterion met. The second one is linked to the first one. So you can only qualify for the second one if you've done the first one, which is, okay, once you've done the transaction, are you monitoring over time that your risk KPIs, that your risk metrics are improving, or that you're meeting your risk metrics? Are you doing the follow-through? If you say, yes, I've got a system in place to measure that the risk is going down, that's a second criterion met. That's one block, the first 2. The second 2 is different. This is not about the adaptation of assets. This is about the financing of adaptation solutions. So not adaptation of, but adaptation through. And here we've said, are you giving if a transaction is enabling the production, the enhancement of adaptation solutions, this is a box ticked. And then under criterion 4, if you're even measuring the impact of that in terms of the adaptation goals that you want to achieve on the ground, that's another criterion met. And then we have a fifth criterion that's only applicable to the DFI community. For the commercial banks, it won't be the case, which is also, are you mobilizing private investment as a result of that? And again, if you're able to tick 2 of these for now, we're saying that transaction is adaptation finance. You can call it that. Next slide, and then I stop. This investor resilience challenge is under consultation right now. You can go on the website. I have a QR code typically. Please be part of the consultation. Please help us refine it. And with that, I stop and I hand it back to you. Thank you.
Thank you so much for that detailed scene setting. I think you've taken us on basically what we'll be discussing today. And with that, let me bring out our team of institutions that are already in this space to share their experiences. So I'll start with you, Mr. Frank, on Tanzania Development Bank's experience on climate risk tools.
Thank you so much, Delphine. My name is Frank Nyamundege. I'm the Managing Director of Tanzania Agricultural Development Bank, which is the National Development Bank in Tanzania. First and foremost, allow me to express my sincere appreciation to AFDB through the African Financial Alliance on Climate Change for inviting me on behalf of my bank to share our experience in climate risk management and its strategic approach that the bank is taking to ensure it plays a crucial role in supporting our farmers transition to more climate smart and green agriculture practices. But building their adaptive capacities and in return turn it or strengthening the bank's financial resilience. But before I walk through our journey, allow me to briefly introduce TADB or Tanzania Agricultural Development Bank to you, because most of you probably might be hearing it for the first time. TADB is a state-owned bank, as I said, which started a decade ago, 2015. It had 3 basic main mandates. First and foremost, to catalyze agricultural financing in Tanzania. And the second one is contribute to attainment of food security and food self-sufficiency. And the last but not the least is the transformation of the agricultural sector from subsistence to commercial farming. In African context, most of the farmers are doing subsistence farming, and our responsibility as a NB, National Development Bank, is to ensure we transform commercial subsistence farming to commercial farming. Uniquely, in its approach, the bank facilitates access to agricultural financing through one, direct lending. That is, we lend ourselves directly to borrowers, but also indirect lending, whereby we deliver through partner financial institutions. We currently partner with around 19 banks in Tanzania. And how do we partner with them? One is that we've been funding them through the wholesale lending window, where we lend them long-term financing, because most of the commercial banks, they don't have long-term financing. So what we've been doing is that to ensure they also get long-term funds to be able to lend. But we also have a scheme, what we call a small credit guarantee scheme, which we do guarantee smallholder farmers to get facilities through these commercial banks in Tanzania. And the reason why we're doing that, we know that mostly, especially youth and women, do not have securities or do not have collaterals, and they are the ones who have been really suffering, not getting facilities or getting funding from the banks. So we have been doing that as well. And so doing for the last decade, we have been able to disburse funds almost half $1 billion, which has gone to around 57 value chains and reaching 1.9 million smallholder farmers in Tanzania. Of course, this is through around 719 agribusinesses across the value chains that I've mentioned, 57 value chains. And then the adverse impact of the climate change have been accurately felt by both our clients and the bank, because climate change is real and varying in scales and severity across the region and value chains. It depends where, if it's much rain-fed, geographical areas or drought areas, and even sometimes value chains. For our clients whose agricultural businesses and livelihoods remain at the mercy of climatic hazards, such as floods and droughts, have really resulted into the loss of thousands of hectares of production, and even had the investment that they've done into those investments. For the bank, the growing exposure of climate-related financial risks poses potential threats to our international resilience, institutional resilience, and the long-term financial stability. So we have some of the actions that are strategic actions that we've done to approach this. One is, as I said, the bank, against that background, the bank has embarked onto the new strategic phase, which is committing to its everlasting climate ambitions by transforming challenges into sustainable financing opportunities. So what we do is that while we are seeing these as challenges, we transform them into opportunities, and by driving climate smart investment across the Tanzania agricultural landscape and reinforcing its role as a catalyst for sustainable agricultural transformation in the country. But also we have advanced the ambitions. The bank, to advance these ambitions, the bank was privileged, that was last year, 2024, to receive technical assistance from the African Development Bank through the Africa Financial Alliance on Climate Change in collaboration with the Global Center for Adaptation. That transported TADB to conduct, I can say, first of its kind, science-based climate risk assessment on the bank's direct and indirect lending portfolio, led by experts from a very reputable consultants firm based in Germany called Adelphi. You might have heard Adelphi. It's one of the best consulting firms that is German-based. So we did this, and we really appreciate it. And again, we thank AFP so much, because they really gave us the funds as a technical assistant to do this. Drawing on an extensive global and a local database, the assessment generated detailed heat maps that illustrates TADB material exposure on climate risk across the crops, subsectors, and the various regions that we operate in Tanzania. And these insights now form a critical foundation for our strategic responses to climate risks. So the outcome of this assessment that was done through the funds that we got from AFDB, that the result of the technical assistant has yielded some of the outputs, like one, to develop heat maps for our portfolio. So right now, the entire portfolio that was really looked into it, we've developed the heat map of this portfolio, but also we've done a due diligence tool that supports the bank to create a climate risk profile of the client and at the transactional level. So we start at the transactional level, where the business development people, when they are going to the field, they can be able to get this support and automatically inform the bank the potential climate smart and green agricultural investment needs of the client at the bank, and can extend green financing. As I said, we've turned this to an opportunity, and we have also enabled this has also enabled the bank to include climate risk into stress testing and scenario analysis. But also we have been able to revise as a bank, our climate-related financial risk policies and procedures. And this has also enabled us as a bank, because in Tanzania, we don't have sustainable finance taxonomy. So since we don't have green finance taxonomy, as one of the benefits that we got from this is that we established a catalog that now guides the business development on potential green agricultural investments. So as the country is trying to develop one, for us we'll be ahead, because we said we cannot be able to be behind. So following the completion of these tools in we have just finished it in mid-2025, TADB sought further support from the African Development Bank and the Global Center for Adaptation to integrate these tools into our digital internal credit system. We have internal credit system that is end-to-end, from where the business development people goes to the farm or to go to the client, up to the end when the facility is being approved. And then we wanted this to be integrated with these tools. So that has been done. I'm happy to appreciate that it has really been done. And somebody might ask, so what is this technical assistant means to TADB? And that's a very critical, maybe if you forget everything that you have heard from me today, this is what you can be able to take and say, what does this mean, technical assistant to TADB? It has some few things. One is that the support has come as a pivotal moment for the bank, significant shaping now how we define our new strategic phase and strengthen our pathway toward achieving TADB climate action ambitions. We have our ambition as a bank toward climate actions. And so what we've done is the technical assistant has positioned the bank among the first banks in Tanzania to effectively respond to the to effectively respond and comply with the recently introduced climate-related financial risk management guideline issued by our regulator, which is the Central Bank of Tanzania. And it has informed the establishment of robust internal governance and operational framework that enables the effective climate assessment and management, fully aligned with these regulatory requirements. So we have really been the first bank in Tanzania to ensure that we comply with the regulator's requirement on these regulations that he has issued. Secondly, the assessment has also played an instrumental and a critical role in informing and defining the bank's strategic action for channeling green and climate finance to the facilities and scale climate smart and sustainable investment across the agricultural value chains in Tanzania, an essential strategy for mitigating the severe climate-related shocks facing this highly vulnerable sector. Of course, translating climate risk challenges into opportunity, what we've been able to do as I'm finishing is to continue to set stages for pioneer in enhancing a flow of credit with a specific focus on green agricultural investment, but also mainstream climate risk by enhancing in internal frameworks and operations, and also continue to work with our development partners. I see a lot of our development partners. JICA is one of our development partner that we've been working with, the AFDB, our very good development partner that they've really supported the bank. So now is to ensure that we continue to work with our development partners to leverage on this relationship to mobilize both financial and non-financial resources. And last but not least, to strengthen capacities across the green agriculture financing ecosystem, including farmers and partner financial institutions. As I said, we work with almost 19 partner financial institutions in the country. And as a bank, we recognize the fundamentals role of capacity building and provision of technical advisory services as a bedrock in building resilience, environmental conscience, future ready and technically equipped green agriculture financing ecosystem in Tanzania. After saying that, I'm saying asante sana, which means thank you very much. Looking forward to deepen and strengthen partnership across these valuable networks so that collectively we enable our bank, which is TADB, to deliver not only its vision on fostering a climate resilient and nature smart, inclusive, and the sustainable agriculture sector in Tanzania, but reach as many people as possible who have a lot of risk in climate financing. Thank you so much. And that's in a nutshell what the technical assistant from AFDB has really been able to do to Tanzania and TADB in particular. Thank you.
Thank you, Mr. CEO, for sharing the experience. I think we can all appreciate that. Sorry, I had a bad cough. We can all appreciate that if your bank in Tanzania, where you're the front line of where adaptation really matters, if you can do it, I think the network has a lot of opportunity to do it further. So with that, let me call on your partner, actually, JICA, to share the experience. And then we'll go later to Papreko, who's online, but let's start with JICA. Great, your slides are on.
Okay, thank you very much. I would like to thank organizers giving me the opportunity to introduce JICA's climate risk management. Next slide, please. Okay, so in order to promote climate resilient development, which is one of our key pillars of the JICA's sustainability policy, JICA introduced climate risk assessment procedure starting from year 2011. The characteristic of JICA's risk assessment are as follows. So the first, the climate risk assessment should be carried out at the early stage of the project formulation, and so that the appropriate countermeasures can be incorporated into the project design. And secondly, in order to support staff in charge of project who may not be familiar with the climate change issues, we have developed some guidance tool called JICA's Climate Finance Impact Tool, or JICA Climate Fit, so that we can standardize the risk assessment as well as the guarantee the quality itself. Thirdly, the assessment will be conducted mainly led by JICA, but we involve the counterpart staff in the recipient countries, since they are the project owner and they have necessary data, policies, and information, including natural conditions or socioeconomic conditions and so on. And this is part of the technical assistance, I understand. And the fourth is that the assessment should be evidence-based or science-based. Therefore, not only the local data, but also the downscale data is also be useful. And then lastly, as a result of participatory assessment, we try to reach a common understanding with the recipient countries. Next slide, please. Yeah, okay. So this is the framework of the climate risk assessment based on the IPCC fifth assessment report. We understand that the concept itself is basically carried over in the latest IPCC sixth assessment report. So our guidance tool is based on this concept. And then it is explained that the climate risk is assessed in the interaction of these three factors, that is the hazard, exposure, and vulnerability. Next slide, please. Okay, so I don't explain in detail, but you can see the definitions and some examples of the factors. So the what kind of the hazard do we have in the project area, and then the how people and assets are affected, will be affected adversely. And then the vulnerability means the sensitivity to climate hazard, and also the kind of the capability to cope with that risk. Yeah, so next slide, please. Okay, so this is some climate risk matrix. So I don't explain in detail, but shortly I will explain that the first step is that identification of the hazard. So we will list up the potential climate hazard in that project area. And then after that, we will consider the current frequency of the hazard. So how much hazard is those hazards will be occurred. Is it frequently, or the sometimes, or the hardly occurred? So we will assess this like this. And then the step 3, they enter the potential exposure in this part. Yeah, so we will identify the what is the existing livelihood and new facilities to be constructed in the project. And the next step is that the evaluate of the degrees of current impact by 4-point scale. Then after that, we will enter the direction or trend of the future change in hazard. So it will be more increase, or it will be same, or it will be decrease. Then finally, we will enter the consider the combination of the future trend and of climate hazard and exposure, so that if we identify the important one is be marked like this. Next slide, please. Okay, so then once after the climate risk is identified, then we will consider the vulnerability, and such as the sensitivity to impact and the capacity to cope with the impact. And then finally, we will evaluate climate risk, and then consider the adaptation measures or the options at the last part. Next slide, please. So this is some lessons learned from our climate risk assessments. So I'd like to explain 3 items. First one is, as I mentioned, that our climate risk assessment is conducted in a participatory manner with the recipient country staff. So the involvement of the stakeholders or the counterpart is a key in order to conduct the appropriate risk management. And the second one is that in order to avoid or mitigate climate risk, both structural and non-structural approaches are important. So climate resilient infrastructure is desirable, but the cost will be increased. So, and also the ability to manage it is important. So then, we will both consider the structural measures and non-structural measures. And finally, there is still a limitation of the meteorological data for the prediction of the long-term climate change impact in developing countries. So we will also use the how can I say subsidiary supplementary data or additional data, so that we can the assessment will be scientific based or the evidence based. So I just today I quickly explained our guidance. So the further information is available. So next slide. So further information will be available in our website. And before closing, taking this opportunity, I'd like to quickly share 2 information. First one is that JICA is currently developing another guidance tool for risk assessment regarding on the biodiversity. So it will be also launched in coming January. So, and then it will also be available in the website soon. And the second one is that JICA will also organize a side event regarding to the climate resilient development today, starting from 11:45 at Japan Pavilion. So please feel free to come and join us. Thank you very much.
Thank you so much, Kotaro. Let me take the pleasure to welcome Yoselin Precosta from PrePreco. She's joining online. Can you hear us?
Yes. Yes, I can hear you well. Can you hear me?
Thank you so much. So the floor is yours over here in Belém.
Okay. So do you confirm you're hearing me well? Great.
Perfect.
Perfect. I have slides.
They will
Can they
load
be
them
presented?
for us. Just give us a minute.
Yep, thanks.
Right.
Perfect. So I'm very pleased to be here, even if it's only remotely, for this session on promoting adaptation measures and addressing climate-related risks. So my name is Isoline Precosta. I'm a technical advisory officer working in ProParco in Paris at the headquarters. and I'm working more specifically with banks on climate topics. Next slide, please. So first and foremost, I wanted to briefly present Proparco. So Proparco is a subsidiary of the French Development Agency Group. We have been founded 45 years ago, and we are focusing on financing the private sector in developing countries. Just to give you a range of magnitude, so in 2024, the financing commitments were of 2.8 billion euros. We mostly operate through loans, but also guarantee, equity, and grants to finance large corporations, infrastructure, access to finance for MSMEs. We operate in more than 115 countries, mostly in Africa, so 50% of our activity, and 20%, for instance, in Latin America. Next slide, please. So at Proparco, we have a long-standing engagement on climate issues. First, with climate finance. So climate finance is one of the pillars of our strategy. So we finance directly climate projects, and we're also doing granting climate credit lines to our partner banks. We have set an internal objective of having financing commitments worth 900 million euros a year. And as you can see on the slide, so we achieved this goal in 2024. We are also providing technical assistance to our clients. So as you can see on the slide, it's approximately 1.5 million euros a year. It represents about 10 projects. And historically, our TAs, our technical assistance projects, were very much focused on supporting our partner banks in assessing the eligibility of projects under the credit line we were granting. But today we are focusing more on reinforcing internal capacity of our banking partners and helping them to really mainstream climate and integrate climate considerations at all levels of their organization, so strategic level, tools, processes, etc. I also wanted to highlight here that climate-related risks are a good entry point in discussions with the client because of the regulators' requirements. And thanks to this entry point, we can also discuss climate integration, climate adaptation, finance, etc. Last but not least, on this slide, we are also subject to our regulators' rules and requirements, so the French regulation. So we are also conducting climate risk analysis on our own transactions. Next slide, please. This is a brief slide to explain what is technical advisory at Proparco, technical assistance. Very quickly and briefly, we provide technical assistance through expertise to our clients. What we do is that we recruit consulting firms upfront, and then each time there's a project that arises, we are able to mobilize the consultants. We are very much focused on the business of the beneficiary, and we cover impact topics, climate, gender, environmental and social management system as well. Next slide, please. So this slide might be the most interesting for you. So this slide shows a continuum of our technical advisory work on climate-related risks and adaptation finance. And it is a typical journey for our clients throughout these topics. Most of the time, of course, we first work on climate-related risks, and then we go towards adaptation finance. A basic and first step that we are doing with our client is heat mapping. So Frank already presented what happened in his bank. But so yeah, a heat map is a visual tool that highlights the sectors of a bank's portfolio most exposed to climate risks, using colors to show different levels of vulnerability across sectors. Once we once the heat mapping is completed, we also overlay it with hazard mapping, so the country hazard map. And when we use the client's location data, we can determine its climate risk exposure and also produce a risk score. And then this risk score, the idea is to integrate it into processes and tools within the bank to improve and enhance operationalization. So I'm going to show some examples right afterwards. More interestingly, maybe it's when we try to have a risk to value approach, when we try to integrate into a risk scoring tool, for instance, an adaptation layer. I'm also going to present an example in the next slide. And last but not least, we can also support our clients in adaptation finance, and this can translate into many kind of activities. For instance, defining or refining adaptation taxonomies, trainings, deep dives on case studies, support in eligibility checking for adaptation projects, etc. Maybe a last point on this slide is, as a development financial institution, we see our role as helping our clients at the beginning of the journey, of course, but really trying to accompany them towards adaptation after the risk identification. Next slide, please. So this slide is a bit dense. This is a set of examples throughout the three categories that I just mentioned and explained. So a first example of a technical advisory project was done in the past is a bank in Tanzania. It was a bank that was starting its climate journey and having and being faced to central bank regulation. So as I just explained earlier, we started with a heat map of the sectors. We overlay it with a hazard map, and we were able to develop a climate due diligence tool that was giving as an output a climate risk score at transaction level. It was a fairly simple Excel-based tool, but still the inputs were limited and the output was this risk score. During this assignment, we also helped the bank review and enhance its existing policies. We performed a bank-wide climate risk assessment, focusing not only on credit risk, but also the other risks a bank may face. And we delivered, of course, training as well. The second example is a bank in Kenya, in the category risk to value, as we call it. Here, it was really interesting because the bank already had a scoring tool in place, but it was complex and only mastered by the sustainability department. So the idea here was to operationalize this tool and see how loan officers could also have the capacity to use it when assessing their operations and transactions. So what we've done during this this project is we have done a mapping of the processes, and we developed a user-friendly interface for the tool for the loan officers to use it. It's also a project where we decided to add an adaptation layer. So we performed a market study on adaptation for 3 sectors, and we came up with an adaptation catalog. And this catalog was integrated, catalog taxonomy was integrated into the tool. So to give you an idea, this tool had for as outputs a risk score, but also a list of adaptation measures, adaptation equipment that could be relevant for this particular client in this particular location, in this particular sector. And the idea was to give hints and insights to relationship managers of the bank to be able to launch a discussion with the client and advise them. Last but not least, an example, a bank in Mauritius that was very advanced when it comes
Yaslin,
to
if you
climate
could
integration.
expedite, please.
Sorry?
Could you move faster on your slides, please?
Yeah, it's almost done. So as I was saying, a bank in Mauritius, very advanced, and here there was an adaptation taxonomy already in place. It was unfortunately not precise enough, or they were not comfortable enough to assess fully eligibility. So we developed a more precise taxonomy. And at the end of the day, we even use this more precise taxonomy and eligibility checking tool for our current credit line with the bank. Next and last slide. Thank you. It's very short concluding elements on, of course, doing TA with technical assistance with banks on climate. It's always pretty much about doing the right thing with the right institution at the right point of time through a gradual and step-by-step approach, starting, we think, with very simple tools on which things can be built on afterwards. And of course, we want to insist, of course, on the cross-departmental approaches that are needed when it comes to climate topics within a financial institution. So that's the end of my presentation, and thank you very much.
Thank you so much. Maybe a round of applause for our first panel, TDB, JICA, and POPRECO, for sharing your experiences. Now we'll quickly move into the next one, and we have some of our panelists here present. I'll call on Peter Healing, KFW, and then we have Stuart Cannon, PIDG, and then we have Maria Moreno Caldover, CAF. Maybe you sit here. Then we have Tofik Dua for Credit Agricole online. So I'll start with you, Maria. Yeah, you have slides. We'll call the slides up. Yeah.
Thank you so much. My name is Maria Moreno. I'm a senior executive at the Climate Action and Positive Biodiversity at CAF. And thank you so much for inviting us to this event. So we can move to the next, please. Next. Okay, so at CAF, our mission, you can see, is to promote sustainable development and regional integration across America, Latin, and the Caribbean. And we aim to become the green bank of the region, but also the blue and sustainable bank. So we are now comprised with 22 countries. I don't know if we can move forward to the next. Exactly. We have 22 countries in the region, and 2 Spain and Portugal in Europe. We are constantly growth to expand our shareholder now to the Caribbean and the Central American countries. Next. As I mentioned, we are the Green Bank and the Bank of Sustainable and Inclusive Growth, but now we are in COP, and we must to be precise about and how we do and how we want to become this green development bank in the region. Next. So we do in 3 different ways. First, we found ourselves in a green way. This year we released a sustainable finance framework which outlines the key policies, process, and mechanisms that guide our sustainable finance activity, mainly such as the green bonds and thematic bonds that we launched this year. We also operate in a green way. We incorporate all the sustainability measures in place in all offices. And finally, we finance green's operation. That is something that we are going to explain more. Next, please. Okay, so here we have all the commitment that we did since 2021, and we commit to have like a 40% per year of our investment in the region in adaptation, mitigation, and biodiversity. We accounting for 25 billions by 2026 in this portfolio, in green portfolio, and we also target a specific blue economy and blue financing goal of 1.25 billions. As for now, we are happy to share that we reached the 41% last year in green financing, 2 years in advance, and we expect to keep these results for the end of this year. And we already have like 20 billions of our portfolio in green financing. And in June, in NISA, we shared that we achieved the 1.25 billion in blue economy. So as a result, we just before COP30 update our commitment to 2030. So now we are going to reach the 50% of our portfolio in green financing. We expect to reach the 40 billions to climate action and positive biodiversity, and 2.5 billion in blue financing. So we also have other relevant sectorial commitment, 10% of biodiversity financing per year, 2 billions to the Amazon, 8.5 million in prosperity agriculture. And finally, the reason that for what we are here is that we commit 50 billion to adaptation and disaster risk management. Next, please. At CAF, we believe that the bank to be the green bank, but also to put a special focus on adaptation. This is very important for us. In fact, we want to migrate from mitigation to adaptation in our portfolio. And we reached 4.2 billions to that purpose right now in our portfolio. And we approve in this portfolio, we include the adaptation, project focus adaptation, and also we incorporate adaptation in the project that we have in other sectors, for example, in infrastructure, water. So it's not only a specific adaptation portfolio, only operation, but we include like these greener measures in the rest of our portfolio. Next, please. So we set here you can set the financing from 2024, and we observed that the 30% of our green financing was adaptation. Mitigation was the 50%. For that reason, I said that we want to migrate our portfolio, and biodiversity was the 20%. Next. So if we deepen in this data, we base our adaptation approach in 3 pillars mainly. The first is integrating adaptation in project financing and evaluation criteria. So we facilitate the access to long-term financing with better concessionary condition, and promoting invested in that consider these short-term alternatives with greater recovery cost. We also Main Street climate adaptation across our portfolio. So, for example, as I said, we emphasize that the designs, construction, operation, and maintenance of the infrastructure, for example, address the risk and the resilience exposure to multiple hazards. And we use, in addition, recognized guidelines to adapt our action, such as the principle for resilient infrastructure in our portfolio. We also work with green funds. You know, we have we are accredited with ECF or the GEF and Adaptation Fund, and we have 10 projects in adaptation funds for 90 millions, and also for additional projects in GCF for 43 millions. And we provide technical assistance to third countries in these key topics. So we help this country to have these holistic infrastructure plans, to promote initiative also with innovative financial instruments such as parametric insurance, resilient bonds, and we also want to work more with the private sector. So next. So as we move forward to 2030, CAF will continue to expand its adaptation portfolio, leverage with other partners that are here today, and to scale and include the private sector. That is something that we really aim to do. So thank you so much.
So yes, I was saying thank you very much, Carl, for being the bank for adaptation. Very bold move. Next, we'll move to KFW. Your slides are loaded, and you have the microphone there.
Yeah, thank you. I think I will skip my slides. Yeah, because I think we've seen enough slides, and we should somehow get into a conversation. So whatever has been allocated to me in terms of 10 minutes, we should use for a conversation.
All right.
Yeah. So actually, I was quite thrilled by what Remo provided as a framework, as an initial concept. Yeah, and also you showed us a journey of adaptation, resilience, and climate risk assessment. And it struck a chord with me because I've started looking at climate adaptation 15 years ago in KFW. And I know how we dilly-dallied around trying to find out what can we do, what can be called climate adaptation. And it was quite a difficult task to actually somehow describe the benefits that you can achieve. And firstly, and that was different from your approach, we actually started with the impact side. We didn't start with the risk side. Yeah, so we thought, okay, there is a water scarcity, it's going to get worse, so what can we do about it? There's agriculture, there is drinking water, there are other uses of water, so we thought about, okay, what can we do? And then somehow slowly it trickled in, okay, now we have to better understand the risks. Yeah, so it was a qualitative assessment initially, saying it's going to get worse somehow. Yeah, and then we said, okay, but what somehow? Yeah, and so we started looking at scenarios and trying to find data. And so many years later, we actually got access to a data bank of Munich Re, which is now providing us with location-specific data on climate risk. So that's a starting point for us now, today. Yeah, it wasn't in 2010, but it is today. And so we came from the people side, yeah. So the beneficiaries and their resilience. We didn't call it resilience that time, so it was impact. And then we somehow came towards, okay, this is also about the assets we are financing. So the resilience of the assets that we are creating should also be insured, not only the people but also the assets. So, and you talked a lot about the banking risk, and then KFW's next step was, okay, we as a lender, wow, we have a risk. Yeah, and we have to somehow factor it into our assessment, though, I mean, we're public development banks, so for us it's not a commercial transaction where we have to price it and say it's a base 5, 10, 15 basis points, more or less, but we said, okay, it's our responsibility to also look at our risk as a bank. So we established a risk assessment as a lender, which is now part of the conventional risk assessment that we're doing for each transaction, which we today call climate mainstreaming. Yeah, so climate mainstreaming for us means that we're looking at the physical risk, at the transition risk, and we're looking, of course, at all the other banking risk that we have with the client. Yeah, and that this all comes together, and so we come up with a financing solution. And then now today we see we kind of managed to get hold of our portfolio. And now we have to talk to our people, our partner banks. And then here, Tanzania Agricultural Bank is here, though they are not an active partner of us, but you're a prime story for a partner with whom we could work. Yeah, and so there are many other banks with whom we are working. yeah, both in the IDFC, but also outside of the IDFC, with lots of national development banks and some funds, which is also part of our network. And so we're trying to enable them to do the same stuff that we are doing. Yeah, we're actually quite a bit lazy people, so we want them to do our job. So we provide TA, and Jaika was talking to us about their TA activities and supporting banks. And you received some, I understand, and I know Adelphi, so it's a German company, we know them well. So it all seems to come together. And actually here at the COP, I was attending a couple of other side events passively. One was the Climate Bonds Initiative, and they issued something they call a resilience taxonomy, for bond investors, which is a little different from what we are doing here, we're discussing here, but they are struggling with the same things, and they were telling in that event they have mapped 1,400 activities that they consider climate resilience activities, which I found quite interesting. So maybe, Remo, you heard about it too, and then you say a few words about it, how it compares to your framework that you are pushing for. And then yesterday I attended something which is called the Adaptation Benefits Mechanism of the African Development Bank. Yeah, they also define what is an adaptation activity, and they are trying to certify it and make it tradable. So same thing, they're also looking at the benefits of adaptation resilience activities and trying to make it tradable for private investors, which I think is a great effort. And hopefully comes together. And I'll put it in the largest picture. Here at the COP30, the global goal on adaptation is being discussed. People are talking about 100 indicators, either compulsory indicators or voluntary. And of course, there are lots of discussions we know are going on, but it's an effort in the same direction. And then eventually you talked about the needs of funding. So 25 billion, you just said, is the annual transfer somehow of capital climate finance, which makes me wonder, we're claiming to do 2 billion a year. So we can't do 10%. I'm sure we don't do 10% of the global climate finance flow for adaptation. But anyway, I'm proud of it. So what we're looking at scaling up, we need to attract other players who should buy into these frameworks. And to me, if all of this comes together and we see here a GGA with indicators being confirmed, putting some sort of a framework to all our efforts when it comes to climate finance for adaptation and resilience, maybe we get there. Maybe we're coming to a point where we can claim in 2030, okay, now we're not doing 25, but 50 or 75 billion. And the LDCs and the countries who are most affected by climate change will say, yes, you made it. You actually got the act together and made a contribution. And this is what, coming back to my own institution, KfW Development Bank, I mean, this is what we need to achieve, isn't it? We don't need to perfect only our system, but we need to see how it all fits together and how we as KfW are part of a system that works. And so it's a group effort, with many players, civil society, banks, private sector, corporates, governments, and the international negotiations. And I'm quite, I wouldn't say enthusiastic, but at least optimistic that we are at a point here where this can happen. So stop.
Thank you very much, KfW. Resilience and excellence, you've shown that. So next we'll have a speaker online, Tawfiq Budiov, Head of Climate Adaptation at Crédit Agricole. Can you hear us, Budiov? Yeah, he has no slides, and we'll try.
Can you hear me well?
Very well. Please take it over.
Great. Thank you. Thank you very much. I don't know, maybe to remind for those unfamiliar with Crédit Agricole, Crédit Agricole is a French cooperative bank, but banking and financial group, offering retail banking, corporate institutional banking, asset management, insurance services, and operates in dozens of countries worldwide. So thank you for inviting me. I'm very pleased to discuss the topic of climate adaptation with you as part of this side event. I think my presence here underlines a strong belief at Crédit Agricole that adaptation is crucial for us. First, for developing a robust and holistic approach to climate action, and also enhancing our climate strategy, which has primarily focused us globally on climate mitigation, and addressing real challenges faced by our clients, our economies, and the regions where the bank operates. So our work on adaptation takes place in a context where, as has been said already, climate change is accelerating. Extreme weather events are becoming more frequent and more intense, with increasingly severe economic, social, environmental consequences worldwide. And Europe and France, where our group operates most, is even warming faster than the global average. This is why, for instance, the European Commission has adopted a new strategy on climate adaptation, and several member states have already published national plans. For instance, in France, the national adaptation plan sets a reference warming trajectory. So +2 degrees by 2030. Plus,
don't want anything to go wrong, so just
I have
if
an
it
echo.
works, we just
So just go ahead. The systems have messed
Yes,
up.
okay.
Yeah.
Yeah, plus two,
no, it's just
2.7
no,
by
if now it
2050,
works. I don't want
and
to try to do something and then it doesn't work.
and +4 degrees by 20,100, providing framework for public and private action. So the message here is clear: adaptation must start now. And now, after maybe more than a year of structured work on climate adaptation, we have built some convictions, and I would like to share two strong convictions that I today with you. The first one is that adaptation makes most sense at the local level, as every territory has its own exposure, its own vulnerabilities, and therefore require its own adaptation pathways. Meaningful adaptation can only happen locally with local actors. And second, the second conviction is that adaptation is not only about managing risks, but also a source of opportunities. It is an opportunity, for instance, to strengthen our knowledge of the knowledge of our clients' vulnerabilities, and better manage risks in our portfolios. This knowledge will enable us to engage with clients and different stakeholders locally to support them meeting their adaptation needs, and thus building resilience, and also foster cooperation with local stakeholders and contribute to territorial foresight and transformation. I mean, prospective reflections on the future of the territories in terms of territorial redevelopment and planning, sectoral transformation, and so on. So in short, adaptation is not just risk mitigation, but it's also a driver of shared value and long-term resilience. And so that has been said, yet adaptation is still an emerging topic for financial institutions like ours, and requires deep transformation. I mean, new risk analysis models, better data, change in processes, new skills, and new ways of working with clients and local stakeholders. And faced with these challenges, Crédit Agricole is adopting a structured and pragmatic approach. And this approach is completely aligned with the UNEP-FI reference framework that has been presented beforehand. It is built around I would say, three phases. First, identifying the main risks, challenges, and adaptation opportunities in the territories where the bank operates. Second is all about experiencing strategic adaptation plans locally, focusing on high-stakes economic sector. This goes through identifying applicable adaptation measures and clients' needs, and finally, it's about co-building concrete responses in terms of products, services, financing, investment, insurance, and even advisory in terms of technical assistance, for instance, partnerships, enabling to meet clients' needs and expectations. This approach allows us to integrate best practices progressively into our offering and processes while responding immediately to the urgent needs on the ground. I would like to share with you an example, a concrete example. We have launched a strategic pilot project in the French Alps, focusing on the mountain tourism sector. This sector is already experiencing a 30% reduction in average snowfall since 1970, and by 2050 projections indicate up to 2 months fewer snow at lower altitudes and around 1 month fewer in high altitudes. This pilot aims to co-develop resilience trajectories with local stakeholders and also support the economic diversification of the sector, and finally provide tailored solutions locally and for our clients. And this project serves as a laboratory for our adaptation strategy, as it enables us to gather field level insights and enrich and refine our methodologies and scale solutions across other territories. This shows that adaptation becomes effective only when we act now on the ground and with local players.
Thank you.
Nevertheless,
yeah. Please, if you could conclude.
Yeah, sure. Maybe to conclude and sum up, I would say that preparing our territories for present and future climate shocks must begin now. Adaptation is continuous and evolving process that requires flexibility, innovation, and collaboration. And at Crédit Agricole, by adopting this structured and iterative approach, we are giving ourselves the means to systematically integrate the climate resilience into our activities. And this is fully, I would say, and today we see climate adaptation as a powerful lever to support local transformation and serve the common good. Yet adaptation is systemic challenge, touching on population security, democratic stability, continuity of essential services as well, and sovereignty of water, food, and critical resources. That's why only coordinated mobilization of states, local authorities, companies, financial institutions like ours, and citizens can meet this challenge. And achieving large-scale adaptation requires financial resources, yes, but above all, I would say long-term commitment, partnership, and trust between public and private actors. That has been said. Maybe just to conclude, adaptation is both a collective responsibility and a historic opportunity to reinvent our territories. So thank you for attention, and now open to question if you have any.
Thank you so much, Dominic, and thanks for sharing Crédit Agricole's perspective. Now, on our panel, last speaker on the panel is Stuart Cannon, Private Infrastructure Development Group. Please share your perspectives.
Hello, yeah, so I'm Stuart Cannon. I've joined from PIDG, or PIDG. I have got some slides, but I think I might take the initiative of my colleague here from KFW and just keep this a little bit sharper and briefer. I think we've got about 5 minutes as well to wrap up. Is that correct? Cool. I'll try and see what I can do about maybe tying it across some of the other points that other panelists have made as we've been going through it. So yeah, maybe just to start with, so Pidge is an emerging markets impact-led infrastructure investor. We have lots of different focus areas, but we're really focused on action and climate and nature, capital mobilization, and investing in least developed and fragile countries. So like lots of panelists have shared, we started on this journey with a very risk-centered way of thinking. We really like solid understandings of our exposure to hazards, exposure to risk, underpins our thinking. Like my colleague here from JICA, who was talking about how you integrate that and how you look at hazards, vulnerability, exposure. That's really core to what we're doing. I'll maybe try to sort of talk a bit more about what we're seeing in terms of the opportunity for adaptation and resilience. I think we need to sort of try and move things away from a pure risk-based thinking. Obviously, it's very important, but we need to think more about what's the opportunity, what's the investable opportunity, and how can we really scale and bring the private sector into that. So we see this in a few different areas, and this links quite nicely with the work on the resilience challenge, and we are a supporting institution of that. And I'll maybe sort of try and tie my points around that. So the first area that we're seeing a lot of traction is more in our sort of bread and butter traditional infrastructure, which is resilient to climate change, and looking at monitoring those impacts. So this is underpinned by good risk assessment and integration of adaptation measures to withstand shocks and stresses. The next area we're looking at is more on this idea of backing businesses and entrepreneurs that are delivering adaptation and resilience solutions. So these are typically high risk, startup, venture development capital type investments. And we're basically trying to back the businesses that we think are going to be delivering the solutions that support the resilience of businesses, economies, other actors. And some of the examples that we see in this space, so we've backed a few different businesses, a business that supplies solar irrigation via modular pumps, a business that provides modular cold chain, cooling as a service. So these is a slight move away from your like hard grey infrastructure projects, and we find you can deploy these quite quickly and you can scale quite fast. And we're seeing a lot of traction in this area, and this really links to the A&R as a service, or as an enabling A&R investment, which is the sort of the second or the third and the fourth part of the adaptation and resilience challenge. The third area that we're really trying to spend a lot of time and effort is how you mobilize the private sector into both resilient infrastructure and into businesses that are delivering adaptation and resilience solutions. So we've got a really good example, or a series of good examples. A lot of them are obviously structured around blended finance structures, and where we're seeing a lot of success is through the use of our guarantees to mobilize local currency or local private institutional capital into these types of projects and businesses. So one example is a project in Vietnam. So this was the first green bond in the water sector. It is the longest tenor green bond for project finance in the country. And it's a large-scale water project that moves surface water into the city of Hanoi, and addresses various climate development-related challenges of over groundwater extraction, concentration of pollutants, saltwater intrusion. And what's really interesting about this, beyond obviously the resilience benefits it delivers, it shows a model where you can look to take local institutional capital, which wouldn't normally look at these asset classes, and you basically provide a risk-sharing mechanism that enables them to invest in it. And hopefully, through time, we'll see a ratcheting down of the guarantee coverage and looking at sort of seeing the private sector in these markets working more intuitively without support from DFIs and development finance institutions. And just my last point, I guess, in terms of the other area that we're trying to explore, which is very relevant for this COP, and probably a term we're all sort of tired of hearing about now, but it's looking at how we use nature and how we invest in nature to build resilience. So again, we've been on a risk-based thinking journey, looking at our impacts, looking at our dependencies on nature, adopting the TNFD framework. But now, again, we're trying to understand what the opportunity looks like. So there's two parts. One is how we integrate nature-based solutions into our traditional infrastructure business, improving the service, enhancing resilience. And then the last point is looking at nature as infrastructure, and it's large-scale, landscape-wide, catchment-wide interventions. and really trying to find financing models. Obviously, the carbon markets are one option, but there's lots of exciting ideas here on the ground at COP as to how there are other ways that you can basically finance these projects, how you can engage the private sector to essentially deliver catchment-wide interventions that provide ecosystem services, which are a substitute or a complementary feature, providing the same sorts of services that some of the hard, more engineered infrastructure solutions that can. And I guess just to wrap up, obviously, this is a process that we need to go on collectively. We've got some ideas at Pidge, but we haven't got all the solutions, and we sort of need to work as a collective. And the more we can build a clearer understanding, how we can simplify approaches, how we can basically make it less complicated, I think that really will help the private sector to get on board and invest in the types of projects and businesses that we need to be supporting. So thank you.
Thank you so much, Stuart, and thank you so much for the two panels. I think what I heard very clearly is that adaptation is still work in progress, but nobody is running away from it. At least from the financial sector, there is good business there. Still a lot of work to do, but there's good business to do. So to close it off, I'm going to give it over to Guillaume Potier from the mainstreaming climate in financial institutions. Many of us are members of that collective. Those that are not, I think it's a good home. So over to you, Guillaume.
Thank you very much. Can you hear me well?
Perfect, perfect.
Okay. Thank you, Davina. On behalf of the Secretariat of the Mainstreaming Initiative, I would first like to thank you and the African Financial Alliance on Climate Change for having co-convened this event and for the wonderful moderation. I would also like to thank IDFC for hosting us today. IDFC is really a driving force of the integration of adaptation in PDB's, Public Development Bank's activities, with almost $20 billion of adaptation finance delivered last year, which represents a 63% increase from 2023. And finally, I would like also to thank our great speakers and Sarah Bendao from the Mainstreaming Initiative Secretariat for having coordinated this event. This has already been a very dense and rich conversation, so I will conclude with just one insight that I'll take away from this event. And what I'll take away from today's discussion actually is that at the financial institutions level, there is already a wide variety of initiatives, of solutions, of tools, of guidelines allowing us to make progress on the integration of adaptation. Of course, there is no one-size-fits-all pathway to adaptation mainstreaming. I think we've seen that through the different presentations. There is no magic bullet, but we do have a very solid toolbox in which we can pick and choose the solutions and tools that we need. Usually when we think and talk about adaptation at COPs, it's always with a focus on very macro and somewhat theoretical issues, I would say. So Peter mentions the global goal on adaptation and its hundreds of indicators. Remco mentioned the various macro estimates of the adaptation finance gap. We also have the Glasgow Pact to the double adaptation finance, and many more macro initiatives. But I really think that we tend not to see and to highlight enough the wealth of concrete initiatives and solutions among financial institutions that were presented today. And indeed, we had today in this panel a very wide variety of financial institutions, commercial ones, national development banks, bilateral development banks, network of actors such as UNEP FI. And we also had a very broad overview and panorama of the perspectives and tools that are available to mainstream adaptation finance in financial institutions' activities, from technical assistance to capacity building to green credit lines, from physical risk assessment tools to frameworks to act on resilience at a more systemic level, which is really important for us as well, and from high-level best practices to granular taxonomies. So I think that with this wealth and diversity of initiatives in mind, the Mainstreaming Initiative intends to keep working to highlight and disseminate, that's the most important thing in my mind, to disseminate such solutions as widely as possible among private and public actors from the North and the South. So thank you very much again. And with that, back to you in Belém, Davina.
Thank you so much, Potier. Thank you so much, audience. maybe to close out, we'll have a group photo, and I'll try to be as creative and get our online audience part of this picture. If you can, switch on your cameras. We'll try put you on the screen and take a group photo on the side. Let's see if we can get this experiment working. And so, can we get on the sides?
The back.
Yes.
I go to the back.
Yeah.
So that someone can stand in front of me.
Can we get? Yes.
Stop behind.
Yeah, those online who can get your cameras on, happy to join the group. Thank you.
So, if someone sits in the chair underneath them,
Then you'll cover them. Okay.
Perhaps like,
All right. Right. I think so. Are we able to see?